Hey everybody, this is Holden Hassel with Equita Final Expense Services and FinalExpenseMastery.com. Today I got some notes that I wrote down from a conversation that I had with my accountant to really understand stuff that I wanted to explain to you, and I wanted to be, correct in the things that I'm saying, because I don't want to be wrong, because this is very valuable information to understand. So what I was talking about is setting up an LLC and the way that I file taxes for myself for HHH Insurance Group LLC. I file as an LLC, but I file as an S Corp in the eyes of the IRS. That's how my filings are done, okay? So you don't necessarily need to set up an S Corp to do that, but the disclosure here is speak with your accountant to understand exactly what you need to do, okay? So yes, I have an MBA in finance. I understand this stuff. I get it. I can comprehend it, but I'm not an accountant. So speak with your accountant to see what makes sense for you and your business and what you want to do. We all operate in the same industry in the same fashion, so this is probably applicable to most of us. But like I said, speak with your accountant. Make sure that everything that I'm giving you is 100% accurate. I wrote it down directly from speaking with my accountant, so everything I'm going to provide to you is definitely accurate. But things do change, taxes do change. The way that corporations are set up may vary depending on how you set yours up. So this is from how I set mine up. This is how I do it. It's from my accountant that I spoke with to make this video, to really have good solid notes on this so you guys can listen to it. So cool. So let's start off with right, so you know that I'm an LLC, limited liability corporation. I file as an S Corp in the eyes of the law of the IRS. So you do have this thing that you want to minimize paying, which is called the self-employment tax, which is going to be only on what's reported to your S Corp. Okay, so you have your overall income to the corporation minus your expenses. That's what your reported income is, and that's what you'll be taxed on, but not with the SEP, which is the self-employment tax. So you've heard of FICA probably before, right? For us, we're going to call it the self-employment tax. That's the name of it, and that's 15.3%. 12.4% of that goes to Social Security, and 2.9% of that goes to Medicare. Okay, so how does that work? That works for you guys, and how does that really benefit you? Okay, so let's go through the math real quick. Now, it's very important to understand as a business owner that legislation can change and that it can impact your business dramatically. Okay, why do I want to save money from a tax perspective? So I have more money to invest in my business and grow it, right? I'm a lot better at managing money and reinvesting as an entrepreneur and growing my business than the government might be. So I don't want to pay a lot of money in taxes because I know how to use it and grow my business, right? That's the most important thing. So anything that can impact the amount of money that you're paying in taxes, right, is not beneficial for you if someone that owns a corporation. You ever heard of the changing corporate tax and the way that all those things operate? That's a little scary thing for me. It's not something that I like at all, especially when I'm trying to grow a business. The more money that is taken from me, the less money I have to grow my business and reinvest in it. The more money that I'm able to keep in my corporation, the more money I'm able to invest and grow my business. I want to scale it. The more that I grow it, the more employees that I have, the more people that I can help, the more families that are able to eat, the more people are able to grow, have an income, grow their income. With the more money that I'm able to save, I can do that at a more rapid rate. You take more money from me, the less money I'm going to be able to reinvest my business, the longer it's going to take me to be able to grow. You can have the same tax rate for me for 30 years, but because of the massive amounts of growth I'm going to have in that period of time, the dollar amount is going to raise with the same tax rate, right? Because my reported income is going to be higher because I've got more money in my pocket to reinvest it and continue to grow my business, right? So now, here's the deal. We understand self-employment tax, how it works, but what we really want to understand is when you have an S Corp or an LLC filing as an S Corp in the eyes of the IRS like I do, you get a K1. Okay, K1's just comparable to a 1099. Okay, it's just, that's what it is with a corporation. Now, you have, for me, right, a W-2 salary. That's what I'm paying the tax on for Social Security and Medicare. Okay, how do the numbers work? I have $200,000. So here's just an example. I'm making it in simple math. $200,000 of income into the corp, $100,000 in expenses. So my reported income is $100,000, 200,000 minus 100,000 in expenses. And one of those expenses is your wages, your salary, okay, employees' wages, and plus a bunch of other things. You got to sit down with your accountant and figure out what expenses are for your business. So I have $100,000 in reported. That's what I am taxed on, but not the self-employment tax, okay, for reported for that income. Only on my salary is that Medicare and Social Security tax. What I'm going to be charged is only on my W-2 salary that I get. So the S-Corp filings, when you do that, you can actually take tax-free distributions from it as long as you have a reasonable wage, is what they call it. They call it a reasonable wage. Okay, so use that information to understand, hey, I don't want corporate taxes to be higher. It's not going to benefit me at all. The last thing it would do is benefit me. I'm trying to grow my business, pay people more money, so that way I can not only pay them more money, put more money into my business, grow it, scale it, have more money, retain, have a higher net income, rinse and repeat, right? Retain higher net income, continue to grow. Get it? Simple. The numbers make sense. Let's put more money in your pocket, and that's going to help you. But you're going to speak to your accountant when you want to do it to set up an LLC, set up an S Corp, LegalZoom, or one of those type websites. You can do that for, I think, like $1,000 is what it cost me when I did mine. And then you do have to get the state licenses as an agency to collect an override depending on the state. Also, if you want to go ahead and write business, you'll need that in there as well. You can go LOA, license only agent, to your corporation, never to an IMO. Never, ever, ever be LOA to an IMO. Own your book of business. In this situation, my corp owns my book of business, right? So that's a very important thing. Figure out how to set it up. Go through this video, take notes on it, sit down with your accountant and say, hey, is all this information correct and accurate? It is. Okay, great. I think I want to do something like this, but first you need to have the income on it in order to do it. All right, so use that tip. That should really help you literally keep more money in your pocket, and that's going to benefit you dramatically.